Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, if you're looking for a great place to help your salespeople sell more stuff and do their deals faster, check out Arrow at heyarrow.com. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and Chip's nice enough to come on and talk about what's going on in the market. So, Chip, man, how was your Thanksgiving?
Thanksgiving was great, Casey. It's one of my favorite holidays. I hope everybody had a great Thanksgiving and relaxed and ate a lot and watched football. But boy, it's usually kind of a quiet time in the markets, and it was anything but quiet here the last few days.
That's for sure. So we had Black Friday, which everyone goes out and gets a good deal on a Black Friday, except for the stock market and the commodity markets. They had the Omicron variant out of South Africa. In the other African countries kind of reared its ugly head a little bit and scared the market here. Friday had a big sell-off. Monday, Tuesday had a big sell-off. And looks like today in the overnights, at least, that most of the grains are starting to rebound a little bit. Oil's starting to rebound a little bit. It's up about 4.5% so far this morning. But I guess, there was some pretty big dips there. Are we out of the woods yet, or do you still think there's some more downward trends here?
Yeah, it's been a crazy ride. Just when it seemed like the pressure was getting pretty high in Washington about inflation and high gas prices, all of a sudden, and I'm not saying there's any coordinated thing here, okay? I wear a tin hat sometimes, but it just was pretty good timing from an energy standpoint. Energy took the brunt of the selling. Friday was one of the top 10, all-time biggest sell-offs, one-day sell-offs in crude oil ever. Stabilized, it bounced a little bit Monday, puked again yesterday, and I was up a couple bucks overnight. But it's quickly, I don't know even what it was, $14, $15 off of its recent highs here from a week and a half ago. Yep. And it coincided with the end of the month. On a kind of a holiday shortened light volume day, and grain options, December options went off the board on Friday as well. So it was kind of the perfect storm. You had some news, you had light volume, you had funds that were probably in profit taking mode at the end of the month anyway, and it all just really made for kind of a wild ride here. Today's start of a new month, right? The last month of the year. And it appears now that, at least to start the new month, that it's back to risk on here. And some of this is around, the stock market. The Federal Reserve did a little bit of a 180, right? They kind of semi-quietly had some, a meeting, not a meeting, but a press conference, a front-facing Jerome Powell meeting that said, hey, maybe this temporary inflation maybe we ought to quit calling it temporary, and maybe we ought to speed up the taper. And that was a little bit of a change compared to what he had been saying, and that pressured the stock market yesterday. And so it's just like all these, the market hates uncertainty, and there hasn't probably been more uncertainty right now, in the last year and a half, and then throw this new variant out. It's just interesting to watch, to try to keep a neutral standpoint. A couple doctors that have been front facing with this, one in South Africa, I forget where the other one was. They're saying, hey, yes, we have treated some of the very first cases of it. It's pretty mild. It might be highly infectious, but it's very mild compared to other strains. And then you got the WHO out saying, the sky's falling and it's, the new apocalypse. And it's like, this thing isn't even a week old. So it's just funny how this works. And then today, either late last night or today, it's back to, okay, this thing's maybe not quite as bad as, what it could be. So back to a new month, and this isn't going to destroy mankind, and let's buy everything again. So it's just like a helter skelter, very, very herky jerky type of a market we're in here.
Yeah, that's no doubt. I went the flip on that, how it went from Friday, Saturday, Sunday, Monday. I go on Thanksgiving. I drove 8 hours, so I had a chance to listen to a lot of talk radio and news and those kind of things. And I was pretty convinced by the time I got out of my car Sunday night and going into Monday that we were going to go back into some level of lockdown sometime this winter. And I'm like, this is the craziest thing ever. And then you throw in this inflation stuff and what Powell's talking about there. I mean, you talk about throwing gas on a flame of uncertainty. I mean, I tell you what, it's kind of all kind of coming together there.
Yeah, it's just it's almost a comedy of errors, right? It's easy to be an armchair quarterback, but you're like, okay, the economy's coming out of the first lockdown. We're getting people have all this money, hot job market, and the whole time through that, we're like, no, we can't raise interest rates, we can't taper, right. And then now new COVID variant, and we're gonna slow this economy down again. Well, now we got to taper. It's like the bad news bears out there or something. It's just like, what is going on?
Yep. Yeah. Very crazy time. All right. So let's jump over here and talk about two things I want to make sure we hit on here. One is what's going on in South America. So if you look at Brazil, there's been some reports that come out of there that have been talking about dry, above average dry conditions coming through Brazil. And they're worried about this first crop corn and then moving into second crop corn and what that might look like. And then also you get that soybean mix in there where they're at as far as their growing cycle goes. So we take a look at that kind of stuff. How are you watching that, and how are you thinking about what's going on in Brazil right now with some drought issues coming up?
Yeah, it's really kind of starting to be prime time as far as the weather market goes down there. It is La Nina. There was some reports out yesterday that they expect La Nina to continue to be strong even through about January, February. That's more than enough time to keep Argentina and southern Brazil on the dry side, and it has been in those areas below, not like horribly dry, but we're just getting into the time frame here, December, January, where it really is going to start mattering. And so now that we turn the calendar to December, the bean market especially, and to a lesser extent the corn market, is going to be watching these forecasts on a daily basis out of southern Brazil, out of northern Argentina, and the balance sheet's tight enough we can't really afford to lose much out of it. And world demand is good, right? I think everybody expects this big bounce back in production out of Brazil and South America. And I think the bean market has gone a long way in factoring in a big crop, like 140 plus million ton bean crop out of Brazil. And if they're going to fight dry weather in southern Brazil, which happens to be some of the better, more productive ground, the northern part of Brazil at this stage looks really good. They've been getting rain. That's not an issue. They're going to have good production. It looks like the southern areas are, higher yielding, and they have been on the dry side. And, if the expectations start ratcheting backwards because of dry weather, you're going to see on top of this inflation, if this inflation talk continues, the bean market probably is the market where the funds have the most amount that they could add to this. And so it could get really interesting before it's said and done. Not trying to predict anything, but you just have to be ready for anything. You could tack $1.50, $2 on beans very quickly if this is a big if, Brazil and northern Argentina are going to fight dry weather over the next 6 or 8 weeks. If they start getting, good rain and ensure a big crop, you probably haven't seen the lows yet. So I think you just have to be prepared for potentially wild volatility, and then throw in all this other garbage we got going on with, inflation and interest rates and COVID, and that in itself is more uncertainty than we've seen in decades. And you got to play out this whole weather market thing on top of that. So it's get ready for some potential fireworks here in the case of beans, and it's going to spill over to corn too. Corn is arguably as tight as beans on the balance sheet, and we've had great demand here. Both on crush pace on our beans, and our ethanol margins have been really good. This crude oil thing is obviously chiseled into these margins just a little bit, but our demand overall has been really good, and so high alert the next 6 or 8 weeks as far as South American weather goes. And it's we never had to fight this 10, 12, 20 years ago, and now you really have 2 weather markets a year. June, July, August for us, and December, January for kind of South America, and so we're starting into the very early stages of a potential weather market here as far as the South American summer goes, their main production time.
Right. Okay. So as we look at some other crops that we have out there that are very tight as far as balance sheets go, you take a look at wheat. There's some talk about going into dormancy this year. There could be some issues with the wheat that they're with the winter wheat as they take a look at the conditions and overall rating of that. When you look at the wheat market right now, especially what's going on in Russia and what's going on in Ukraine, there's a lot of pressure there. I guess, what are your thoughts on wheat?
Yeah, a mixed bag there, right? We've had a huge run higher, got to some numbers that we haven't seen in many, many years, right? North of $10 on the Minneapolis, and, challenging $9, on the Kansas City, and, well over 8 on the Chicago. Haven't seen those levels for a long, long time. We got a lot of bullishness built in. Starting to be some ideas maybe that the USDA is underestimating the size of the world crops, particularly Australia. Now, they've been struggling with wet weather and maybe quality issues and getting that crop out of the field. But we've had a pretty healthy correction here. It's probably about right on time, too, in normal seasonal. So, in the back of my mind, maybe the wheat market has topped. That doesn't mean you're just going to go straight down back to $5.50, $6. You're likely going to have some volatility, maybe some sort of a retest of recent highs, but you have to be on alert after this big of a run that the wheat market, especially this time of year, kind of late October into November, it's a lot of times when we kind of put a seasonal high in. But with all that being said, I think you hit the nail on the head, right? We're going into dormancy. It's been still very, very dry in the plains, Kansas, Oklahoma. They really haven't fixed the drought, so to speak, from a year ago, and that hasn't gotten a lot of press yet. But it will this coming spring if you don't start getting more precipitation out there. So maybe the bull market in wheat is going to pause and take a breather in here. That's not unhealthy. I don't want to see it get much deeper in price than where it has, say like at the lows yesterday. But if we could just slop around here a little bit, we may be ready for a whole nother leg, but it might take till late winter, early spring, depending on how, this wheat crop in the plains is going to come out of dormancy. Obviously, it doesn't have to take that long. Wheat's, if you have a whole nother renewed, inflationary push here, wheat's a good, vehicle for the funds to come in and continue to buy this thing as a kind of a basket of a, world food source here that's going to kind of rise along with inflation. So again, I guess I'm talking on both sides of my mouth here. I think, maybe in the short run, you've topped. I think you slop around a little bit in wheat. If there's going to be a renewed bull, it's probably on continuing dry weather, late winter, early spring in, Kansas, Oklahoma area.
Right on. All right. Jump down here and take a look at the protein markets real quick. If you take a look what's going on in the hog market, especially, they've just, man, I tell you what, they can't win for losing. So take a look at that one real quick. What are your thoughts there? Pork cutouts yesterday had a pretty big shellacking, fell off over about $1 Tuesday. I guess so. As you take a look at that, what's your thoughts there in the pork market?
Yeah, very interesting market here. We've had some kind of sloppy action in hogs here, and to your point, yesterday finally, which is typical, in September, October, and I guess in the big picture, we probably got through that. Okay, you're still sitting with February hogs just north of 80. We have had a $4 or $5 break off the highs. The crazy thing is these summer months, look out August, July, they're still sitting there $95, $96. And, I think with some of the high construction costs and input costs, I don't think we expanded a lot as much as what you would have thought given the high prices. It's just not that easy to come out and, coming off of the catastrophe, once in a lifetime type of the thing that we had with the COVID shutdown and, killing off breeding stock and, market animals. It's not that you have this huge price rise. And I don't think you got the what you would have normally thought is all the expansion from high prices. And, China, yeah, maybe they built their hog herd up. Maybe they haven't. They continue to lightly be buyers of U.S. pork. I think the hog market maybe yesterday started to tell you that we're past the glut that you normally have, in the third quarter, and maybe coming out of it, and things are starting to get strong. And I like these deferreds. I mean, June, July, August, all north of 95, even with this recent break, and maybe one of the bright shining stars here going into the new year of 2022 is the hog market. And cattle aren't too far behind. They've had a little break from the highs, but they have their own kind of bullish fundamental issues with the sheer amount of breeding stock cows and heifers that we've put into the system. I think it's kept maybe a little bit of a lid on cash prices for a few months here. And the drought really hasn't fixed itself. There's a lot of hope that we can kind of get some better precipitation, some snow out, in these western areas of Montana, Wyoming, maybe some snow, rain, whatever it is, in the plains. But fundamentally, we should be kind of at the bottom of the cattle cycle, and killed a lot of cows and heifers the last year or so. I think that bodes really well for things out ahead of us. Maybe not next week in cattle, but certainly out into summer and next winter, a year from now. I think that things look pretty solid from a livestock standpoint, which is good because those guys have been through some challenges here, obviously, in the last 18 months.
Yep, sure have. Well, Chip, good stuff as usual. Folks want to reach out to you and get more information about what you're doing there at Blue Reef Agri Marketing, or just some help working on that plan right now. I mean, because there's a lot of stuff going on right now that's going to throw some loops and some plans. So if folks are working on that, what's the best way to get a hold of you?
Yeah, best way is just give us a call at 309-550-7213. We'd love to chat with you about your plan. It is time to have one. We didn't even talk about new crop stuff, but these record high input costs and what kind of acreage mix. Guys are making that decision right now. And, we've had some opportunities, even within the last week, well north of 1250 on these new crop beans. So got to have a plan. The quicker you have one, the more able you're, to execute on that plan and pull the trigger when the time happens. So don't hesitate to give us a call.
Absolutely. Well, I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also go to Moving Iron LLC for everything Moving Iron related. So, Chip, thanks for being on the podcast, man.
All right. Thanks for having me, Casey.
With that, I'm Casey Seymour with Chip Nellinger. Let's go smart, folks. Out.
You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.